The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the Magical Monday, the December 1st edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day, and let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, means we can find a gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email, send it off early, and send it to Steve at TFNN.com. Inside that subject heading, please put radio show question. Now, if you're inside our Tiger's Den, and you should be, then any and every ping will do. So let's go ahead and get this show started on Magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Hope everybody had a great holiday weekend out there. Could go for another one of those. Going to have to wait just a bit, but it was great down here in Florida. We start our day here with a bit of a mixed bag. Got most UNSCs trading to the downside. Dow 267, S&P 28, 116 for the NASDAQ 100. Russell's down 19. The transports are up 155. Semis are off 15. NASDAQ Composite down 114. New York Stock Exchange off 54. Gold is up $13. Silver's up $1.25. Light sweet crude 75 cents. The upside. Natural gas back 4 cents. Copper is up 3 pennies. 30-year Treasury off about half a point out here. I've got the XLK up on my screen out here. The XLK has a buy the D point bottom pattern. It went ahead and confirmed that a few days ago on November 26th when price gapped to the upside. So that gap is that bullish reversal candle. It's traded inside a slightly bullish structured profile. And as long as price can remain above its oscillator and change line, which is red, just recently changed colors out there, the oscillator and change line is currently printed at 284.74. As long as price remains above that, we ought to see a move up to 290.16 level. Weekly time frame chart for the XLK, TD9 count top. That went ahead and completed 3 weeks ago. That's just simply led to a sideways consolidation with inside his profile between 276 and 291. The monthly time frame chart does have a sell the D point top. It went ahead and formed a dark cloud cover at the end on Friday out there. And what needs to happen in order for any kind of traction to the downside inside the technology sector for the S&P 500 is going to be a close below its monthly oscillator and change line. That's at 276.94 out there. 272.52 is the daily support level. So you've got tops on the daily, weekly, and monthly time frame, but you also have a bottom now on the daily time frame for the XLK. Will the bottom on the XLK be able to start lifting all boats higher? Don't know the answer to that. We'll find out as price approaches resistance. Should it get up there? And that's going to be in that 290.16 to 291.04 level out there. If we go take a look at the daily equity future contracts, let's pull those up on our screen. Here what we will see is we've had 5 consecutive sessions to the upside. You can choose any of them. You've got that same signal out here. So let's just go ahead and open up the ES Mini. Let's open this up. What do we know about it? Number one, we know that price is trading above the top of its daily profile and its green oscillator and change line. Those are both bullish conditions. I'm not saying price can't pull back to test that level of support. And that's at the 67.82 area. But what should more likely outcome is as long as price remains above those two levels, 67.82, price should go target its swing point, which it's doing. That's from October 30th. Now it's tested the low. The low is at 68.51. The high so far today is at 68.64. We're trading at 68.33. Are we? Yeah, we're still above. No, 68.33. Hello, Stevie. We're below that swing point. But right now things are bullish, neutral to bullish, let's say. They're not bearish, that's for sure, on the ES Mini. Now, what should unfold out here after that nice 5-day rally is we should get a 2 to 3 bar pullback. That would be normal in the dance steps for the S&P 500, really for each of the indices out here. If we take a look at the NQ on Friday closed above the top of its daily profile. If it can remain above it being 25, 358, then we'll have a bullish profile, a bullish change in trend for its profile out there, and that would suggest that we had higher ground out here. Again, 5 consecutive days the upside. Got to be at least a 1 day, maybe a 2-day pullback that is in our future. If we take a look at the Dow Equity Future contract, the Dow is traded above profile resistance at 47,141. It's traded above its oscillator change line at 47,215. Again, it needs a bit of a rest, whether it's 1 or 2 days out there. As long as price remains above 47,141, no big deal. And finally, on the Russell 2000 attempting to form a new profile this morning. This new profile is below price. That is a bullish signal. The top, and we won't get a confirmation of this profile, by the way, until this evening. John is asking inside the den about taking a long position inside of the IWM. One area to look, should we get some type of retracement, don't know that we get something that deep, would certainly be the top of that profile, John, 24, 25, 10. That's if this forms. We'll know tonight. That means we'll also, inside the den, you'll know tomorrow. But we'll still take a look at the IWM and also some details on the Russell. But we've got 5 consecutive days to the upside. So let's not get too out of sorts out here if we get a couple of day retracement out there. Those just simply the normal cadence, the normal dance steps of the market. Let's go take a look at what's going on from an intraday standpoint. From an intraday standpoint, let's start by taking a look at the ES Mini. What do we know about it? Well, what we know about it is what? We know that this is going to be an interesting one. So let's try to figure out where to start here. So the only topping pattern on the top section of the charts that we have out here would be 120-minute Rhodes momentum indicator top. That took place at 10 o'clock last evening. We're trading. The key level here, so there's a new profile that formed at about 4 o'clock this morning. So let me just pull this open. Let's actually open up this chart out here, because this is going to be the level. It's going to be a level to be watching, observant of today. So we can see that we have this new profile that forms at 4 o'clock. We trade below it for at least 2 consecutive bars. It was really 3. And then we start to get back into it at 10 o'clock in the morning. We get really right up to the first level of resistance. That's the bottom at 68.39. The reason we're looking at this is a bullish structured profile forms below price. If it's only a counter trend move to the downside, price finds resistance on a 120-minute basis, that is, between 68.39.50 and 68.45.75. So from the bullish side, you're watching 68.45.75. If you close above that, that tells you, at least on the 2-hour time frame chart, it's more than a counter trend move, and you likely get back up towards its profile resistance level at 68.64. Steve Rhodes with TFNN. We come back to this break. We'll take a look at a couple. I'll put up the NQ charts out here. And then maybe we'll start taking a look at some of the requests that have come in. RGTI, NVIDIA, the SOX, IWM, IBIT, Marvell, and SMH. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. I actually put the intraday charts for the Dow Equity Future Contract up on our screen. The reason is because this is the set of charts I believe is driving the bus today, not the NQ and not the ES Mini. And if we take a look at the 60-minute time frame chart, it formed a nice TD9 count bottom pattern at 3 o'clock this morning. It completed at 4 a.m. And the low of that pattern has already been tested once and rejected. It's being tested again now, in essence, as we speak, that low being 47,462. So on an hourly basis, if we close below 47,462, that's going to tell us that we are likely to head lower. And I think the other indices will go ahead with the Dow. The Dow is one that has held up the best so far. The Russell not doing too bad as well. We're going to take a look at that. But that's the level that I'd be watching today for the Dow Equity Future Contract. That may point to the direction for the rest of the indices as well out there. Let's go ahead and get to our first request out here. This comes in from Tom G., one of Tom's favorite stocks, one of many people's favorite stocks inside the Tiger's Den, and that's Rigetti, RGTI. The question is, where's Rigetti headed to? So we know we've got an A to B equals CD pattern to the downside. We have not really, the question was, we looked at it last week, did we really get down there? Do we have it completed by the D-point pattern? Because it had a hammer candle, so the A to B equals CD gets us to about 20.06. The bottom of that hammer candle was down at $21. So, is that close enough? And I don't know the answer to that question. But here's what I do know, Tom. Right now, we have price trading below its red oscillator and change line. It's also trading below profile support at 24.50. If it closes the day below 24.50, it's likely going to get back to at least tag that hammer candle. That hammer candle's got volume of 52 million shares. We've been trading for a little less than 2 hours. We're at 9 million shares. So it's a 30 million share kind of day, not really coming back with a ton of volume. Another level of support for RGTI is the bottom of its weekly profile. 23.21 is that level. And the price were to close below both the daily and the weekly set of profiles, as well as below the bottom of that hammer candle. Then we're looking at 21.42, the top of the monthly profile out there. So what we, at this stage here, let's see, this has struggled with rallies. It's had no problem 5 days to the downside. We get a 3-day rally. We get 5-6 days to the downside. So all the rallies have been 2 or 3 bar sessions out there. So pressure most certainly to the downside, but price is near support areas, daily, weekly, and monthly out there. So, Tom, I don't have a clue right now what RGTI's intentions are. It looks to me to be headed lower, but we got these support levels that aren't that far down beneath where price is trading at right now. So I'd say RGTI, we just kind of shelve that at this moment in time until there's some type of clear directional signal. Perhaps, Tom, there's a better directional signal on NVIDIA. Let's go find out because inquiring minds would like to know. We take a look at NVIDIA. NVIDIA has found support inside its daily profile. And that's what it's trading within. And that's got support at 174.84. The center, 182.78. The top, 190.71. Today, price gets down at 174.84 level, and it has found support. If we close above Friday's high out there, it shouldn't be too hard to do, that high being 179.29. Odds would favor we make a move up towards the center of its profile. That's at 182.78 out there. It's an A to B equals CD pattern on the downside. It has not completed that pattern, but as long as price remains inside that profile, that trip to the downside is going to be circumvented by those profile levels at 174.84. The Dow equity future contract has got a fairly balanced profile. The bottom at 167.23, the top at 189.31, the center right about where we're trading right now, a little bit higher at the 179.85 level. Rhodes Momentum Indicator top on the weekly. Rhodes Momentum Indicator top now on the monthly time frame chart. The monthly time frame chart has a profile that has support at 151.37. The center's at 171.64, so that would be the first level of support should price move lower. And the resistance level is 191.92 out there. So in the case of NVIDIA, its rallies have been basically two-bar rallies. We've only had one two-bar rally since it made its high on the daily time frame. So pressure most certainly to the downside still in NVIDIA, but you've got that new profile to contend with there, Tom. The best that I can say here at this stage of the game is a consolidation with inside the daily, the oscillator and change line truly acting as a resistance level. It's lining up with the center of its profile right around the 182.78 level. It looks to me like that's where price wants to rally towards. Whether or not it can take that out, that I don't know. So, Tom, hope that helped you out with both NVIDIA and Rigetti. I know you'd like more information or something that's more defined or clear. That's about as good as Stevie can get. Now, I will say this. On a weekly time frame, we have had 2 weeks to the downside out there. But I can see looking back, we also have had a 4-bar move to the downside there as well. So I think just at least a couple, 1-2 day rally, at least at this moment in time. Now, let's go take a look at Jeff writes in, and Jeff would like to take an SOXX out here. Let's go see what it is doing. So as we look at the SOX, this is the ETF. This has got an A to B equals CD pattern to the upside on the weekly time frame. That's got a price objective somewhere around 320, 320.32, or thereabouts. Is that like the outcome? Well, the daily time frame says yes at this moment in time. Why is that? Because price closed above the top of its profile on Friday, 293.46. We're trading above that today. We're actually trading above Friday's high at 296.99. Well, we're 296.92 right now. If we can remain above Friday's high out there, boy, that's an indication that it wants to rally and wants to rally all the way back up to its recent highs. So no top on the weekly, no top on the daily. No top on the daily, and no top on the monthly chart for the semiconductor index. These markets will not top without the semiconductors participating in that venture. We have had 5 consecutive days of the upside. Maybe this is bar number 6. That tells you about strong rallies out there. And that even look at the monthly time frame chart. We've been up for 6. We were up for 6 consecutive months, and we pulled back last month out there. Maybe that's it to the downside for the semi. So the daily looks bullish, the weekly looks bullish, and the monthly looks bullish out there, Jeff. So I hope that helps you out. Fletch is looking for an entry into IWM. So let's pull that chart up on our screen. We're probably going to have enough time to look at the IWM during charts here before we go to break. Now, when I go to break, what I'll do is I'll switch over, take a look at the equity future contract for the Russell 2000 to complete this. You're looking for an entry point out here. So one entry point, as we take a look at the dance steps for the IWM, we can see that most of the retracements are 2 to 3 bar retracements. So why don't you do this? Why don't you, and with price trade above the top of its profile at 240.21, above its green oscillator and change line, we know those are bullish conditions out there. I would say, why don't you take a look at, take a position, maybe take 2/3 of it, after a two-day pullback out there. And if we get that third day, add that third to it, unless we see something else that changes. So that's one thing to consider out there with the Russell 2000 being in this bull market. If we take a look at the weekly time frame chart out here, the weekly shows what? The weekly does not have a topping signal to the best of my knowledge. Price trade above profile resistance and screen oscillator and change line. It is bullish. The monthly time frame took out a Rhodes momentum indicator top that it had from back in November of 2021. 711 million shares traded hands that month. We passed with 871 million shares, and last month with 921 million shares. So the Russell is on fire. It's got A to B equals CD patterns to the upside. So you can understand why Fletch is saying, hey, where is an entry point? We'll look at the Russell 2000 equity future contracts to try to get cute, so to speak, out there. But it may be as simple, Fletch, as a 2 to 3 bar retracement. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We are taking a look at the Russell 2000, the intraday charts here for the equity future contract. You can see a 30-minute Rhodes momentum indicator bottom, a 15-minute Rhodes momentum indicator bottom, 10-minute Rhodes momentum indicator bottom out there. And so what we're trying to identify is where's a potential place of support on a pullback for Fletch to be able to take a long position. So when we take a look at the daily time frame chart, we can see out here, Fletcher, we are trading below last Friday's low out there. If we close below that, to me, that would indicate that we should get at least a 2 to 3 day retracement out there. And a price target would be its oscillator and change line, currently printed at 24.38 out there. In order to get to that level, we've got to take out this morning's lows out here and take out those patterns. We don't necessarily have to do it today, but if we did get that, that would be another indication that we're headed lower out here. What I'm looking for is any kind of real significant anything out here. Since the 30-minute time frame chart's got that nice Rhodes momentum indicator bottom, to the upside, what you're watching out here is at 2,530 cents out there. Price able to take that out, we're headed higher in the Russell. That would be its 30-minute T9 count breakdown resistance level out there. So I think it's as simple as probably a 2 to 3 day retracement out there, unless we see some other kind of pattern on intraday chart for the Russell 2000 equity future contract. So thanks for your request out there. Let's go take a look at IBIT. This is for John C. John is short. Where did Stevie put that? I think it should be right here, and you're most welcome, Fletch. So IBIT, you're short. Are you short this? Maybe it is. So let me share with you what IBIT is doing, and then I'll put up the Bitcoin charts. I believe these two are correlated. Maybe this is the ETF for Bitcoin. A little bit, IBIT would make sense. So what we've got out here is price has pulled back, and it's testing the buy zone of its daily profile. So that buy zone out here, John, you're short. It's between 47.88 and 49.08. So what you'd love to see here is a close below the bottom of that bullish structured profile. Now, price is trading into a swing point that formed on November 21st. 168 million shares traded that day. In 2 hours of trading, we're at 41 million shares. We're about 120 million shares. So price is traded into a bullish structured profile, into a prior swing point with lighter volume out there. That doesn't mean that it will hold, but it's a pretty good indication that it may hold out there. If you look at the weekly time frame chart for IBIT, it forms a Rhodes momentum indicator top. Price gets all the way back to its breakout level to 47.36. Getting back to a breakout level can be a bottom. There's no bottom pattern, but in fact, that can be a bottom. The monthly time frame chart for IBIT actually formed a brand new profile, first profile that it's had out here. Is it trying? Oh, it's a new profile, second profile. This formed last week, and you're trading below it. So that's suggesting to move lower out here. But the weekly and the daily, you're at support. You got to bust those levels of support for this to suggest that being short is the correct move out here. Again, no bottom patterns other than price getting back in the hole. Well, you actually have a by the D point bottom pattern. You got this Three River Morning Star candle formation out here. So price going to have to close below 46.68 on IBIT to negate that by the D point bottom pattern. Let's take a look at Bitcoin. Bitcoin, I'm not sure. I would guess we are still in the December contract. So let's go ahead and put that up on our screen out here. We'll probably know momentarily. Yeah, so Bitcoin, kind of similar to what we just took a look at IBIT, and that price is trading inside a bullish structured profile. Again, this is the December contract. I don't know IBIT, what the holdings are inside there. I'm assuming it's Bitcoin, but what contracts, that I don't know. But here what we can see with regard to Bitcoin, as Bitcoin also had that same by the D point bottom pattern, was formed with a bullish hammer candle and bull sash candle back on November 24th. So the low on Bitcoin at 81,080, that is your key level of support. But you have profile support at 83,429, resistance up at 95,174. The weekly time frame chart here does not look so good, not like IBIT. Now, what price is doing is testing its TD9 count bottom from back on April the 11th. The volume there, I don't have volume, so I can't help you out. I do have price, though. So 89,060 is the number that you need to see price close below on a weekly time frame to negate a TD9 count bottom and suggest that you head back towards 66,525. Monthly chart, trading below profile support at 99,860, so nothing to hold it up there. It's really, quite frankly, all about the daily. And that's going to be two levels to watch. 83,429, that's profile support. And then finally, it's by the D point bottom, and that's at the 81,080 level. So I hope that gave the information that you were looking for, John. Thanks so much for your request. Duncan Steve would like to take a look at the Marvell out here. So let's pull Marvell's charts, MRVL, up on our screen. You got Marvell having a nice rally day. This is day number 3 of consecutive moves to the upside. Steve-O, what it wants to do is trade them a profile resistance as well as its oscillator and change line. It wants to go target TD9 count breakdown resistance. That's at 92.87. That's the daily time frame. Weekly time frame trading is in bullish mode. It's trading above profile and its oscillator and change line. It could want to target 121.81, but it'll just wait to see what the daily does as it gets to 92.87. The monthly chart for Marvell, it's had a nice rally. It is trading above the top of its monthly profile at 90.94 out there. As long as it can do that, 90.34, I should say. As long as it can remain above that, then that's bullish. That adds the idea of a further rally. So daily says rally, monthly says weekly says rally, and the monthly is in on the game. Says, yeah, no problem there. So that's what we see, Dunk. We take a look at Marvell. Hope that helps you out. You didn't want to take a look at the SMHs, so instead of the SMHs, we're going to go take a look at silver. This for John inside the Tiger's Den. So we take a look at the silver contract out here. The daily, it's got one big A to B equals CD pattern to the upside out here. So let's take a look at it. Let's open it up. So on a daily time frame, we'll pull it back. I'm just simply, John, starting with the swing point from back on July 31st, 2025. I run that all the way up into its Rhodes momentum indicator top that forms on October 17th. Makes a retracement out there. Forms a nice bullish hammer candle on October 28th. And we passed that Rhodes momentum indicator top last Friday. We negated that signal. It still has a Rhodes momentum indicator signal that's been triggered, but that needs a bearish reversal candle to confirm that top. Short of that, price wants to go target its A to B equals CD objective, at least the initial objective of 63.25. This retracement is less than a 0.618 retracement. Typically, if you do less than a 0.618 retracement, you form an A to B equals CD and trade along the left-hand side of that C to D leg, you're going to do more than a 1-to-1. Now, that's what it looks like, and that's what it should do. But a bearish reversal candle, John, on a daily time frame would confirm a Rhodes momentum indicator top, and that would suggest a further move lower to at least test support, or maybe just a 2 to 3 day retracement. Most of its retracements have been 2 to 3 days for the last several months out there. That is the daily time frame. We come back from this break. We'll finish looking at silver. We'll look at the weekly and the monthly charts as well out there. The monthly says caution, Will Robinson. The weekly says caution, Smallshin. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pros pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. My system seems to have frozen. That's not a good thing, because the solution to that is really a problem. Let me see. Let's try to go with game plan B here. I'm going to fire up eSignal. That's going to take a few moments. More than a few moments, quite frankly, to populate. So what I can do in the meantime, let me try this out. Let's look at the seasonal charts out here. Let me see if I can move this over while things are going on behind the scenes. So here's the seasonal chart. Good. Okay. At least we got something we can talk about. Hey, we can talk about leftovers. I don't want to do that. Let's talk about the seasonal charts. This is the S&P 500. This is a 25-year time frame. The red vertical line shows us where we're at right now. If you focus in, you can see that typically over the average last 25 years, we form a little short-term top. We do a little bit of a pullback for a couple of days. This says, right around December 4th, that top typically comes in tomorrow. Maybe it's today. We're just off by a couple of days out there. So what we're seeing is somewhat normal. And then we start to move higher again. Maybe into the middle of next week, we start to pull back just a tad until right around December 19th. We continue to move higher out there. That's over the last 25 years. If we take a look at 97-year cycle out here, 97 years worth of data, this suggests that we rally up into the end of this week out there, pull back into about that 19th time frame before we then take off through the end of the year. This is next year is going to be let's see what other options we have out here. So for more, we've got a post-election. That's really this year that we're in. So we got the midterm elections. Midterms are next year, right? So let's pull up the midterms out here. This is, again, this is the S&P 500. This is over the course of, it says over 90. Well, it says over the course of 97 years. That's correct, and it's got identified all those check marks to the left of the year. Show you what is being used out here, and so this shows that as we take a look at next year, should be a relatively bumpy sideways to higher move into about the middle of April out there. At least that's what the S&P 500 has said historically over a 97-year period of time. Yeah, this still is frozen, so that is not good. But where's the other system? Where is that running? That still is not up. Okay. Let's see here. Now, Stevie has to go to a real game plan B here. I've actually got to... sorry, folks, while I try to maneuver this to see if I can get things running here. And so I've got to completely shut down that Ninja system. And that task, okay. Yeah. Save it. There we go. So that's gone. going to try to get that back up. This one maybe ought to pull up a bit quicker out there. My apology for that. Password going. Didn't like that. Okay, not good. Oh, I know I didn't. It'd be helpful, Stevie, if it turned off the caps lock key. All right, let's try that one more time. Okay, that's loading. Sorry about that again, folks. So we were taking a look at silver's my recollection, and now we've got the e-signal system that is also popping up. So we'll have both going at the same time. That should be a lot of fun out there. Okay, so we got some Dow equity future charts popping up on our screen out here. So we're starting to get there. Come on, baby. Give me that. There we go. Okay, so let me get one more thing going here. Here we go. Let's get a data feed hooked up. Wow. I've not had this happen during the show out there. I know it's happening for me. I just haven't been able to figure that out. Now we're going to move there. We're going to switch over from the Dow equity future contract here. We're going to move over to the silver contract. John was asking about it. We were taking a look at the daily, weekly, and so forth. I wanted to just simply bring note to you. We'll get these charts here pulled up to the 240-minute time frame chart, the 4-hour time frame chart. And I'll give you the time frame that this bar is going to close. The reason is because the 4-hour time frame chart, and I know you're trading silver both ways, is going to go ahead and complete a TD9 count topping pattern. So that's going to give you a nice little benchmark. You can see right now we are in the bar following bar number 9. This bar is going to close at 2 p.m. So whatever the high is, and you know the routine, whatever the high is, I don't know what it's going to be. If we start trading above that, that's going to be a bullish outcome. The 2-hour time frame chart at this moment in time is likely going to negate a TD9 count top at 12 noon. That's 13 minutes from now. So it looks like silver wants to continue to rally. Again, you've got that TD9 count top that says anywhere between now and 2 p.m. is when that topping pattern can form. You want to watch the shorter term time frame charts. Not that there's any signals of a retracement pending out there, but that's what you're kind of looking for in putting together that 4-hour chart. And if I quickly go back, well, that's probably gone by now because of how we had to shut down. But let's come back here. Wasn't really what I wanted to do, but I forgot. I've got to wait for this to populate. So it's going to populate. I'm going to put up the silver chart. It didn't retain the son of a gun. I know it didn't retain the stuff that I had drawn in there. And on the monthly time frame, what I really want to do is put that to a so on the daily time frame for silver, you can see it negated that daily Rhodes momentum indicator top, wants to cruise higher. Weekly negated a TD9 count top. That was a TD9 count top that had formed on October 17. So that's giving you signals that it wants to move higher. We're in bar number 7. The monthly chart is the one that says, okay, at some point in time during the month of December, we're likely to get some type of at least some type of intermediate term top, maybe something that leads to a 2-month retracement out there. That's where we're looking at when we get to silver. Boy, that was a long way to get there, but that's the way that we got there. Not too many options. Dennis, West Palm Beach wants to look at ticker symbol GCT. So let's pull that up on our screen out here. GCT. You completely lost me. No audio. We have audio on Tiger TV. Shouldn't have lost me though. That's a problem with the. Well, I don't know. The system just flattened out there. Let me. Al, can everybody hear me? Al's typing. I think we're good. Audio is in the den. Okay, perfect. All right, so GCT out here. GCT on a daily time frame is going to form a TD9 count top between today and Wednesday. We are in bar number 8 as we speak right now. That should lead to a short-term retracement of, let's say, 2 to 3 days out there, with its likely price target, Dennis, being the daily oscillator and change line. That is currently printed at 35.28. The weekly time frame says once that is done, I'm ready to continue to move higher. It negated a TD9 count top and formed A to B equals CD pattern to the upside. The TD9 count top's high was August 22nd out there. Volume on that candle was 5 million shares. When it was passed with 4 million shares, and last week with 2.4 million shares. So light volume, but nonetheless a big A to B equals CD pattern to the upside out there. And so that should continue once the daily's done with its retracement after it forms that TD9 count pattern. That's likely to take place between today and Wednesday. And the monthly chart for GCT wants to rally all the way up to profile resistance, and that is at 41.33. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We don't often have the black charts, my e-signal charts up on our screen out here. This is the chart that's most interesting to me. And this has this has got the major indices out there. So major indices from an international standpoint, lower right is the Nikkei. That yellow lines that you see out there, those are the 2024 highs. When you trade above a prior year's high out there, you're basically in bullish mode. So you can see we're trading well above the 2024 high for each of these. So you're starting from lower right, you got the Nikkei. Next to that, the Hang Seng. Next to that, the Shanghai. Next to that, the up top now to the right, the semiconductor index, then the FTSE, then the DAX. Then we go up to the top. You got the NASDAQ on the upper right. You got the S&P in the center, the Dow in the upper left. What is interesting here, we are in a worldwide global rally, period, end of story. This is not a rally of, in my opinion, this is not a rally of U.S. dollars flowing here to the U.S. That's still to come. That is likely still to come out here. What's kind of interesting is I take a look at some of these other charts out here. What else is an interesting chart to look at? Well, today, I tell you what you're watching really for today is really the spot VIX index. Here is the 50-day exponential moving average, 1861. You can see we gapped up this morning with regard to the VIX. We've traded lower. As long as you remain below the 50-day exponential moving average, that is a positive for the S&P 500. If you take a look at what transpired at the most recent lows out here, we had the spot VIX to get in contango with its 6 months and 3 months in this 1 year chart out there. It's given us nice bottom signals. We should rally up into the end of the year. It's going to be a bumpy ride, at times out there. But really what's interesting to me are those yearly indices out here. We have not had global capital flowing to the U.S. out here. If we ever get into that mode, the Dow right now is printing out at 47,000. I say 60,000 is nothing. That's if we ever get global capital that starts flowing over to the U.S. because there's problems going on over in Europe. Folks, stay tuned for all the great programming. Thanks for joining me on Magnificent Monday. Have a terrific day. I will look forward to seeing you soon. Take care and be safe out there.